So much. We'll leave it there. Now let's bring in our market experts. Mario Gabelli is chairman of Gabelli Funds, Jack Gage of Forbes Magazine, and Peter Schiff, Euro Pacific Capital and author of The Little Book of Bull Moves in Bear Markets. Mario, let me begin with you. We haven't seen you in a while, and I want to catch up, and it's great to see you. In case you've forgotten, let's look at the 5 big mustard seeds. We're going to put them back on the full screen because I think a lot of people have forgotten the positive mustard seeds. We'll put them up on the full screen. A humongous drop in retail gas prices from $4.20 to $1.66. $360 billion consumer savings, according to Professor Mark Perry of the Carpe Diem blog. $40 oil down from $150. That's going to help corporate profits. Of course, rock bottom mortgage rates. A big Federal Reserve pump priming, which is expanding the money supply like there's no tomorrow. And 6 to 9 or 12 months, that hits the economy. And thawing credit spreads. LIBOR spreads are really coming down big time. Mario, do you think this is going to be a recovery mustard seed? Are people just too pessimistic, including this morning's Wall Street Journal?
Larry, from my point of view, the economy is going to continue to decelerate. Layoffs coming after Christmas will accelerate, but those are baked into the market. On top of that, on mustard seed number 6, which you don't have there.
What's that?
Enormous fiscal stimulation for consumption, for investment, for productivity.
You think government spending is going to be stimulative?
I think that you're going to have, for example, for businesses which are frozen, every company that I've been listening to worrying about liquidity, worrying about CapEx, something for capital expenditures. Put in an investment tax credit. Put in accelerated depreciation.
Now you're talking. Now you're talking.
Washington, that's what I thought I was doing.
Well, it hasn't been announced yet. Washington Post Sunday article has a paragraph that says the Obama team is considering business tax cuts, which could be cash expensing, an investment tax cut. Who knows? Maybe you'll be cutting corporate tax rates. Okay, let's put that in the pile. Doesn't that virtually guarantee a recovery next year? And aren't people just too pessimistic right now? They've lost their minds. They've lost their bearings. They're demoralized. I understand this, but why? Why? They're ignoring the facts. Mustard seeds are growing.
9 months from now, Larry, 91% of this country will be employed.
Right.
They'll get confidence back, and all of those little elements you're putting in. On a global basis, the number you gave for oil consumption in the United States was a little higher than my numbers, but on a global basis, it's $600 billion for the consumers. There are 700 million cars on the road in the world, 250 million in the United States. So while we're having a cold spell right now, I think even in the springtime, you'll start seeing some improvements.
So springtime. Yeah. Springtime. I couldn't agree more.
The numbers are going to look better.
And it's important not to listen to economists who are saying not until the end of 2009. It's very important not to listen to economists. Last question. Hang on, Peter Schiff. I can hear you. I can't see you, but I can hear you. Where to invest safely? Where to invest safely right now, in your judgment?
In my judgment, Larry, over the next 5 years, who's going to be on the next Forbes 400 list? Right?
That's right.
And it's not going to be those that put their money in 1% T-bills. On the other side, if you've been in T-bills, you have an opportunity to go out and buy more gasoline for the same dollar. You have an opportunity to buy more stocks and more suits.
More stocks, more suits.
That's it. But let me finish up on the consumer. The notion of giving to the consumer a cut, the working person a cut in his FICA tax, suspended for 6 months, not the $500 shot. If you're making $40,000, your biggest tax is your 6.2%.
That ain't a bad idea.
Your 6.2% FICA tax. Keep it for the employer. Let it.
They're going to change the withholding rate, by the way. That's better than a tax credit if that's how they're going to do it. Peter Schiff, mustard seeds. Your turn.
Well, first of all, if anything, Larry, people are not pessimistic enough. They don't realize how bad this is going to be. This bear market has a long, long way to run. And, you know, unfortunately, all the government stimulus is going to stifle the economy. You know, it's going to impede any natural recovery that the market would have been able to orchestrate absent government interference.
How about a business tax cut, Peter?
Well, look, I mean, cutting taxes is great if the government cuts spending, but if they simply borrow more money and bring us more into debt or print more money and deliver more inflation, those negatives are going to more than offset the advantage of any tax cuts.
How about plunging gas prices at the pump, Peter?
Well, A, that's only temporary. They're going to go back up, but that's being more than offset by many other negatives that are certainly running in the face of the consumer, such as the fact that his home equity has disappeared, his mortgage is resetting higher, maybe he's unemployed or he's underemployed.
Peter, mortgage rates. Generational lows.
No, but
unbelievable. We got a chart of the 30-year mortgage rate and the short-term rates.
Yeah,
are
Larry,
coming down.
I'm talking about the guy that was relying on the teaser rate that is now resetting. And even though rates are low, they're not going to be as low as what the teaser rate was. Now, sure, some people are going to be able to refinance their underwater mortgages and get a reduction. But I think in general, you're going to have more people with headwinds and tailwinds.
All right, so you don't buy the mustard seed planting mustard seeds into recovery. You're out. Jack Gage, what is your response? Peter Schiff, pretty smart guys, excellent forecasting record, and the great Mario Gabelli also is turning optimistic for next year. How about it, Jack?
Yeah, I think there were a couple incongruous points today. When we look at, for instance, the commodities, we saw oil and we saw gas prices still at low levels. There was a time when a cold snap would have brought about higher natural gas prices, higher fuel costs.
Let's stop
and
there.
There's a disconnect.
That's a wonderful point. Oil fell again today. You're down $40, about to probably drop below $40, despite global cooling, and despite the Saudi production cuts, and of course the obvious, the drop in retail gas is breathtaking. How can people ignore that? For the last 3 or 4 days, they've ignored about a 15% drop in world oil prices. What is up with that?
What we've seen is a tightening of the correlation between oil and the economy. Oil is now trading as a proxy for the U.S. economy, and I think it represents what we were saying, that overly pessimistic view of where the economy is going to be in 6 months. I tend to agree with Mario, yourself, 6 months out, I think we could be in a much better position than we are today. I think if you look at just bank stocks, for instance, and the health of their balance sheets, they are starting to come together. We're starting to see some of this direct stimulus from the government.
You still 11,000 down?
Yeah, absolutely. I think by the end of
Peter Schiff, what do you think? Gage says 11,000 down, Peter.
When? What?
When?
By the end of 09.
End of next year, 11,000 down, Peter. What do you make of it?
Look, if the Dow goes to 11,000 by next year, gold is going to be at 2,000 or higher. So it's not really going to matter. But I don't think the market's going higher. I still think nominally the market's going to move even lower over the next year. Again, there's nothing to turn this economy around, but there's a lot of things that are going to make it worse.
Mario Gabelli, last word. In this segment, you all come back. I just need a quick one. Single best safe investment in your judgment right now.
Well, Larry, I just want to throw in a couple of more items.
Not too many.
FASB 157, you got to change it. Sarbanes-Oxley, you got to change it.
Right.
You got to put small businesses back into the game.
You are correct, but you're qualifying. We don't know if that'll happen. Maybe it will. Mary Shapiro. You can't be any worse than Chris
I've got
Cox,
a Christmas list. I got a Christmas list.
Single
Mine
best
is not secret.
safe investment. Single best safe investment for those who are dispirited and demoralized.
I like quality companies that are basically having pricing power, and that will be taken over.
For example.
And I own all of these.
For example.
And I'm buying them. Cadbury, Schweppes, U.S. Cellular. I'm not looking at 50% gains anymore like I did in
Cadbury, U.S. Cellular.
I'm energized. I'm looking for companies that can triple, Larry, triple.
Look outside the United States. There's plenty of them.
Look in the United States, and there are plenty of them.
He wants outside U.S. Peter, we're going to come back.
Play golf where he wants.
No, I like his international play. We're going to come back. Listen, tough stuff. Everybody stay right where you are. We have much more to cover, lots more, and plus we're going to head overseas to open up the Asian markets, and Peter Schiff himself wants to fly us all overseas to make our investments. CNBC reports. I'm Larry Kudlow. We'll be right back straight ahead. Thanks very much, Karen. We're back with our market experts, Mario Gabelli, Jack Gage, Peter Schiff. Peter Schiff, I'm going to put up on the full screen a bunch of credit spreads that are really declined and narrowed a lot. Uncle Ted, which is LIBOR versus the T-bill. Look at that thing. That thing's way down. I think it's the lowest in 4 or 5 years. Even at the yield curve, investment-grade bond rates are coming down. Look at your Moody's Baa rate. And my absolute favorite, I got a 2-year swap spread and the stock market. All right, they're inverted. But you can see that swap spread, which is inverted, that has come down so much that it is suggesting a massive rally in the S&P 500. So, Peter, I know you don't agree with this, but I want to give you a whack at it. Is it possible in the short run that all the Fed pump priming and all the statism and bailout nation of the Treasury in the short run is going to be very positive for stocks?
Well, I mean, look, anything can happen in the short run. We've come down quite a bit in a short period of time. I mean, the market could rally for any reason whatsoever. I mean, and if it does rally, it's not because of all that stimulus. It's despite it all. But ultimately, any short-term gains that we might register are going to evaporate because what the government is doing is damaging the economy. We have some real structural problems in our economy that we need to address. Unfortunately, what the government is doing is making these structural problems worse and making it more painful to ultimately correct them. So if there is a rally, people should sell into it. And if there's going to be a rally in the U.S., the rally will be twice as big outside the United States. So I think it's still better to sell U.S. stocks and invest abroad. If there is a rally, you're going to get in on it. And if there's a rally, there'll probably be a sell-off in the dollar, so you'll make money twice as fast abroad. And maybe the rallies internationally will be real, because I think the global market is pricing in a global depression that is not going to occur.
All right,
These are America's problems. You know, we owe the world a lot of money, and so our creditors are hurting.
Okay, hang on. Let me get Mario's take on this. Okay, Peter makes some strong points that the government is going to, in the long run, do more harm than good. In the short run, there may be a rally, but you should sell into it. How do you react to what Peter Schiff is saying?
Well, we're buying businesses run by good bit management, and we're buying them at a discount from intrinsic value. We're looking out over the next 2 or 3 years. We're not making 50%, Larry. We're going to make doubles and triples on the investments that we can pick. So you've got to buy stocks. If you want to buy the old markets and do ETFs, you're trading soybeans, you're trading commodity, you're trading oil, that's great. That's not the game I play. We are investors. We're buying businesses that sell goods. And
time frame, time horizon, 5 years, 10 years?
No. I think 3 years or 2 years. And look, we also want to, for taxable accounts, it's not what you make, but it's what you keep. So if you're day trading or you're buying things like commodities, you're paying a 45% tax. We're going to make 15, maybe 20% tax on our gains a year and a half out.
What do you say to people? Okay, they read this Wall Street Journal front page. Stock investors lose faith, pull out record amounts, $72 billion.
Are you reading this?
In October.
This is the Wall Street Journal 1930. This is the Wall Street Journal 1975. This is the Wall Street Journal today, Larry.
Wall Street Journal 1982.
It always happens.
So you think that people should disregard this front page story?
No, I think it. You know, you got to read something, Larry.
Well, you don't have to.
You could have read about the Giants last night.
Right,
if
much
you
better.
You could have watched it. And
but I mean, this is what is it? Jack Browning or Jim Browning? He's E.S. Browning. He's a very good reporter. So you're basically saying this is the kind of stuff you see at the bottom. Is that what you're saying?
I see it all the time. I was just in Zurich. I was in Geneva. They're bearish. This is good.
That's a bullish sign. If the Swiss are bearish, that's a bullish sign, isn't it?
But this is pre-Madoff, and they're probably more so today. But that's okay, because when you look at things like that, and you look at the notion of confidence being at an all-time low, I like that, Larry. This is terrific.
I think there'll be a lot more bearish at the bottom. I think you're going to be seeing bond prices also collapsing by the time we're at the bottom of this thing. It's not just going to be a bear market in U.S. stocks. The bonds are going to be in an even bigger bear market.
But Peter,
before
having
the stock
corporate
market
bonds...
But when I can buy a company at
I'm
a 20%
talking about governments.
But when I buy a company at a 20% discount from the current price, and I'm buying a company that over the next 5 years can have pricing power and they're cutting costs.
Still market.
Maybe.
Terrific.
I mean, it depends. I mean, if their customers are abroad, maybe. But if they're in the United States, they might not have the pricing power. Their customers might be broke.
The United States is 18% of 25% of world GDP. 18% is the U.S. consumer. That's 50% more than China, Russia, and then Brazil. And if we can't get our engine started, good luck.
All right,
well, that's going to change when the exchange rates realign.
Yeah, listen, Jack. Now, Peter Schiff makes a strong point about the dollar. Okay, the Fed comes out last week, Tuesday, shock and awe, balance sheet expansion, zero interest rate, unlimited pump priming, buying bonds such that, and I agree with Peter, there's a government bond bubble, a treasury bond bubble. Why would foreigners invest here if the dollar is going on another sinking binge? Wouldn't we be better off investing overseas? Why would they come here?
Right.
In fact, why would investments invest here with a sinking dollar?
You know, with the Fed's pyrotechnics, the gold did a big yawn, and, you know, I still think that a strengthening dollar long-term is good for the U.S. economy. When Peter says about investing abroad, I'm not sure where he's talking about. Is he talking about the U.K., where financial services jobs are 21% of the job force as opposed to 4% in the U.S.?
I'm being more selective than that.
The commodities bubble is popped. I'm not sure where you go that's going to give a better rate of return than a recovery.
No, but by the way, I can't ignore Peter. And that is that I was just in Hong Kong a couple of weeks ago, and I found bargains there. I found companies in Japan selling below cash
companies
value.
in Japan.
Oh, it's incredible.
In Japan, like Kikkoman.
So you agree with Peter Schiff in international investment?
No. I'm buying stock specifics, industry specifics, international investments. At the beginning of 07, the common knowledge was buy China, buy Russia, buy India, buy Brazil. You're down 80%.
If you waited till the peak to buy, but what if you were buying 5 or 10 years ago? You know, whenever you have major bull markets...
Listen, if I bought Wrigley's 5 years ago, I would have cash in the bank and I would be way ahead of the game. You know.
China's a big story. It's not a day, it's not a 1 day, a 1 year.
But we
this
also
is a
don't
generation.
know what's really happening to their economy.
Peter, what's the single biggest factor that moves you to recommend foreign investment rather than U.S. investment? If you had one thing to point to. I've shown you my hand. My cards are on the table. 6 mustard seeds. What's your card for global investment?
I think it's trying to get off a sinking ship. I think I said there are some serious structural problems with our economy that are going to result in a major economic collapse and a huge decline in our currency. And unfortunately, the government, as I said now, is making the situation worse. They're socializing our economy. They're interfering in ways that are only going to make our economy and our markets suffer more than they have to. And I think until they stop doing this, and until we can have a meaningful recovery, investors need to preserve their purchasing power by getting outside the dollar.
Mario, how about capitalism and not statism for a change? He's got a point on that, doesn't he?
In 1989.
I mean, I'm a short-run bull. These mustard seeds, I'm going to argue till I'm red in the face.
But in 1989, the Berlin Wall came down, and you had a war between Karl Marx and Adam Smith for 180 years.
Adam Smith won.
And now we're going through a new process.
What is this?
To adjust.
Is this a temporary new process, this government takeover?
If you read the press...
Is it temporary?
If you read the press of 1974, 34 years ago, we had high inflation. We had just coming out of a war, still mired in Vietnam. We had a president that was resigning. You had a lot of sentiments like that. And you had
we're in much worse shape now, though.
Jack
and we're going in the wrong direction.
All right, hang on. We got another segment. On the way out, Jack. Will President Obama instill confidence, okay? Business tax cut or not. Will he instill confidence? It's a psychological thing. What do you make of it?
I think he will. Short term. I think longer term is another question that you start getting into the economic policies he'll put forth. But short term, I think when you look at whatever job creation does come out of this stimulus will be good for the short-term psyche of the country.
What if Paul Volcker is tough on GM? Volcker is right by his side. What if Larry Summers includes Mario Gabelli's tax cut? You know, I want to slash the corporate tax rate, but Mario's right.
Obama's going to be terrific.
I mean, Obama's polls are very good. I acknowledge it's a honeymoon. I'm Jackie Gleason. I've been an Obama honeymooner on this story. But could he be a more positive, 1,000, 1,500 point factor here?
I think he could if he so chooses. I wish he would listen to Volcker even more. And
Volcker wants to eliminate FASB 157.
Right,
suspended for 15 months.
Everybody's going to come back. Peter Schiff, Jack Gage, Mario Gabelli, stay right where you are. Got some more to drill down on. I'll tell you, in the short run, I don't believe it. Money supply is booming, and retail gas prices are plunging. That's got to be good. Don't go away. I'm Larry Kudlow. We'll be right back. All right, back with our market experts, Mario Gabelli, Jack Gage, Peter Schiff. Peter, just start me off. Favorite international investment, because you've been talking it up quite a bit. What are you saying to folks?
Yeah, well, basically, I think the big theme over the next 5 or 10 years is going to be the major shift in purchasing power away from the United States as the dollar realigns lower versus other currencies, particularly the currencies in Asia. Asian consumers are finally going to be able to afford to consume much of the stuff that they're producing right now and shipping to us.
Would you buy Japan, Peter?
Yeah, I'm in Japan, I'm in Hong Kong, I'm in Singapore. I'm in the countries that are heavily exposed to the Asian markets, particularly the Asian consumers.
Are you worried about a China collapse, Peter?
No, not at all.
Not at all, even though it's the worst numbers we've seen in, 10, 12 years.
No, you got to look at it in the context of what's been happening there over the last 10 years and look at the valuations of these stocks. I mean, literally, there are stocks in this market now that trade at 2 and 3 and 4 times earnings that yield 10, 15, 20%. Stocks are trading for a fraction of what they're worth. It's a fire sale over there.
Hang on,
you got a fire sale here too.
Yeah.
I mean, I don't
no,
have
it's
to
not.
go over there.
Nowhere near.
Come on,
the prices are not nearly as cheap.
No. I can find lots of companies. You're painting with a broad brush. Paint with a scalpel. Paint the way Picasso would. Not the way I would.
I should paint the way my bride paints. She's really,
roller brushing. He's roller brushing.
She's not. She's better than
He's
Picasso.
roller brushing. Japan ink, China ink, Shanghai ink.
At the very beginning of the program.
And by the way, I have an office in all 3 of them, which I opened in the last year because I agree with that.
At the very beginning of the program, you mentioned a couple of hot stocks for investors that you regard as safe. Could you repeat them? We'll put them up on the screen.
Well, I'm not looking at, in quotes, hot stocks. These are investments for 2 to 3 years.
Hot meaning safe, good, positive, constructive in this atmosphere.
And the business is terrible. I like Energizer, ENR. Which one did I have up there? Cadbury Schweppes, chocolates. Irene Rosenfeld is going to wake up and say, I want to own this. It's going to fit into Kraft. or someone else will wake up and want to own it. The other one was U.S. Cellular, 6.1 million customers, U.S. Cellular Field. I think the family will wake up and say, you know, we owe it to our shareholders.
Shouldn't people stay out of money market funds? The rates are so low, the government rates are so low. I mean, shouldn't they move out a little bit off the risk curve, for heaven's sakes? Hasn't all this, what is it, $4 trillion in money funds just gone too far, Mario?
Absolutely. The risk-reward ratio will shift back to reward. Right now, you're risk-averse, you're putting money in, you want return of capital, not return on capital, and that will shift over time.
Last word, Jack Gage.
Yeah, listen, I like the banks. I like the small banks, regional players. I think the mortgage rate's coming down, volume for mortgage applications going through the roof. I think it's a great time to be a small
Peter Schiff, last word. Will there be a Fed chairman in our lifetime who understands the need for a sound currency?
I certainly hope so, for all of our sakes. And until there is, I'm not investing in the United States. So.
Okay.
Gold is fungible and it's global.
I appreciate it. Look, Peter has
Gold's real money.
Peter's had a very good record. You know, got to give credit where credit's due. Got to give Mario Gabelli a lot of credit. Thank you for coming around. Got to give Jack Gage of Forbes a lot of credit. By the way, in case you missed it, you can catch